Welcome to the daily stock review of Capital Southwest. The goal of this channel is to uncover the world's best stocks that have 100x potential by reviewing 1,000 stocks in 12 months. If that sounds good, subscribe to come along. Who am I? I'm Jack. I'm an individual investor just on the journey, 2,500 hours in over the last 7 years, and I'm sharing the lessons along the way. This is my investing process. It's got 5 steps. Today I'll tell you how I came across this stock and performed the 5-minute check to see if it's worth looking into further. These are the guys I learn off. They did pretty well for themselves over just a little while by following in their footsteps or following the breadcrumbs they have left behind. We should be able to follow in their footsteps. Now, if you'd like the free investing resources that I wish I had when I first started, including valuation calculators, checklists, etc., you can jump on those, link in the description. It's free. It's my gift to you guys. All right, let's get started. So Capital Southwest. Came across this stock whilst performing a screen for small stocks, so anything less than a 2 billion market cap, and that had high revenue growth, which is sales growth over the last 3 years. Now, I've transitioned over into the finance sector after looking at a few other ones, which you can see in one of the playlists for small caps if you're interested. But otherwise, that's how I came across it. And now let's jump into it. So to perform this check, so things to take note of: the PE ratio at this stage, and it looks like it's kind of climbing up, is 15, which is usually a low number. So it can mean that the earnings has increased a lot. People aren't willing to pay that much for it, or a number of other reasons, but that's what we hope to find out. Why? The psychology and why the marketplace is selecting a stock price around this versus something else. So let's have a sticky beat. So I need to find the annual report. So I've literally just typed in Capital Southwest annual report. Got to their financials page, searched for annual filings, cracked open the latest one. All right. Now, it's an American-based company, so it's in a 10K format, which is easy. Usually got a little quick link to find these reports, and we're here. Whoop, whoop. All right, so I like looking at the income statement first, and it's in thousands. So we're going from 24 to 25 to 26. And we've got a few different sources of income here. Ooh, nice. So this makes it more interesting to have a look at. So let's just, anytime that it looks a little bit more difficult for other investors to check it out is interesting for us. So interest income is there, I guess, non-control, non-affiliate investments appears to be their largest, and it's 133 million to 152 million to 163. So some steady, strong growth there. What else have they got? Got some other types here: non-control, non-affiliate. Payment in kind, dividend, fee income, and total revenue's gone from, or total investment income has gone from 178 million to 204 to 232. All right, so that's some pretty reasonable growth. Like, it's not crazy. It's not doubling. Pardon me. It's not doubling, every 3 years like some of the businesses that we've checked out. But depending on how these earnings are set up and how long these businesses are running for, that's a pretty reasonable growth rate. And this revenue might be more robust than some of the others. All right, now let's have a look at the costs of the business. Total operating expenses gone from 67 to 95 over 3 years, so it has increased. But income before taxes, and net investment income. It's going to be our net for that period. Oh, we got some realized gains and stuff, blah, blah, blah. All right, so net investment income's gone from 110 up to 135 million. And that's pretty much it. So we can see they got some fairly strong growth here. Now, it doesn't come out and give an indication for how this business, it's a little bit difficult to see, but understanding how this business makes its money would be an interesting one. And seeing if the number of customers has increased or if they're making each customer worth more to the business. Now, preferably, we'd like to see both of those outcomes. We want to see each one of their customers making them more at the end of the day. All right. Let's go and have a look at the balance sheet. And we just want to look out for some obvious stuff. So it's in thousands. So we've got 500,000, 177 million, and 2 billion. So I got 2 billion in assets, 1 billion in liabilities, which is on the positive side. We like that. Seeing more assets and liabilities. What do we got? So we've got a fair bit of debt. As part of that, we've got some credit facilities. They got some different notes available that they need to pay over, the prevailing few years. What else? All right, so it looks fairly reasonable. Doesn't look like they're going to be stuck. How much cash have they got on hand? Cash equivalents, 29 million. So not much, but they are getting, like lump sums come through, I'm assuming for the dividends, interest and stuff from what they're doing with themselves. Now, what else? Let's go and have a look. So, 3 things that I'm looking for in this quick check. Mastery, have they mastered their customer? We can see that revenues are growing. Moat. So is there a moat around the business? Can we see that in the margins of the business? So it is making a nice kind of profit margin at the end of the day, which was we've got our starting point, I guess, here, and then we've got our costs come out, and then we've still got 50% of that at the end of the day. Remembering that there's some other bits and pieces that have to go in here. So it's not just black and white for this one. Now they've got a net increase in net assets from operations, which is what they're using for their starting point for the cash flow statement. And we want to see how the business is spending its money. And so this gives us an indication of how rational the management team are. Right. Do purchases and originations of investments. So taking a big lump sum off, proceeds from sales and repayments of debt investments. All that comes out. Net cash used provided in operating activities. So we've got a negative. So in their operations, they've used up more than what they've made. And usually for most other businesses, this would be a positive number because that main part of the business is making the money. Now, cash flows from investing activities. Meh. Nothing really in there. And they got their cash flows from financing activities. So we got how have they continued this? They got proceeds from common stock offering, borrowings under credit facilities, repayments of credit facilities. So, you buy some debt, you sell some debt, or pay it off. Debt issuance paid, and proceeds from issuance of September 2030 notes. So I've got some money there. Redemption of notes. Dividends to shareholders. Common stock withheld for payroll. All right. So there's a few things going on here. And for my benefit, I think I'd be looking into this business further and doing a bit of a deep dive so I have a better understanding of how this business is structured. Because at this stage, there's a lot of different bits and pieces that they're doing in here. This business is more of an investment vehicle, as in it does appear that they help out other businesses, and then as part of that deal, they then take equity in those businesses. And depending on the arrangement they have, they'll take some, potentially cash up front, or they'll take equity in those businesses and they'll help these businesses grow. So kind of think of it like at this stage, my understanding would be, it's kind of like a publicly traded company that does effectively like private equity. Because majority of private equity will buy everything and then load it up with debt to leverage those positions. And they also have a special bit of a toolkit in which how they want to help those businesses grow and increase their value over time. And then some of those businesses will have an exit strategy, some won't, and they'll just want to be either paid out or continue to get dividends from the businesses they've bought into, depending on how well or how much cash those businesses are throwing off. So then it's all about how they structure the deals. So for this one, in my toolkit, it doesn't come straight off at me as, this is a great opportunity, because I don't understand it well enough and it doesn't come from my wheelhouse. But I'm willing to learn, and the best way to do that is to just go in, learn, So read a few of the financial statements, go back a couple of years, understand all the basics. So how do they understand their customer, understand what the mode of the business is, if it has one at all, and then go through management as well. And then by doing so, you usually come up with a pretty good understanding of how the business makes its money, what's its customers at the end of the day, and you can go from there. You don't have to write things off just because it's not within your circle of competence. It's not within your circle of competence yet. And it just means that you need to do a bit of homework before you jump in and make any form of investment. Because at the end of the day, if you don't know what you're investing in, you're just speculating at the end of the day. All right. Obviously, with the exception of if you just index investing, in which case it doesn't matter. Risk-wise, you're protected because of ignorance is bliss. Okay. So that's my take on this one. Is it worth looking into? Look, I think it is with the growth of its revenues, but like I said, I don't know if that's just by the fact that they've increased customer base, increased how much each one's worth, and they've got the flywheel going in the business now that those businesses have started to improve and make some cash. But it is an interesting looking investment, so I think it would pay dividends for me to go and check it out, help understand, and add another feather to my cap in terms of understanding these kinds of businesses. All right. If you like this, you might want to check out this playlist, which goes over all the rest of the small caps that I've been doing. You can see other playlists that I've been cracking into on the channel as well. Or you can check out this next video because YouTube thinks you'll like it. Cheers.